All I know is they are both hard assets that are better than fiat money. So I own both silver, gold, not as much as I own Bitcoin, but I own them as protection against fiat debasing, which is programmatic, right? Fiat
Yeah.
is 100% certain to debase. And so you need to own hard assets. I don't really care too much in the short run how it trades, but in the
Mm-hmm.
long run, I know it's a winning trade. The transfer mechanism in the fiat Ponzi is commercial banks. So
Right.
what are some of the problems that I see in commercial banks? First of all, Bank of America itself is sitting on over $100 billion of US Treasury losses on a mark-to-market basis. Okay,
Yes.
100 billion.
Jeez.
But the big boogeyman under the bed is commercial real estate.
It is a well-known and established fact that fiat monetary systems are unmanageable and therefore unsustainable. It is a system that feeds the greed and ineptitude of a few while continuously exploiting the many. Not only are these currencies backed by nothing, just thin air and sovereign authority, but those that oversee the operation of these systems are also at liberty to make reckless decisions with absolutely no regard for accountability and consequences. That's why many advocates of alternative monetary systems and hard assets like gold and silver often caution that we are gradually drawing close to the end of the great fiat Ponzi. In a recent interview with Wall Street Silver, Greg Foss, the executive director at Validus Power Corporation with decades of experience as a portfolio manager, explains that owning gold and silver is one of the best decisions one could make for one's portfolio, not just as an investment, but as insurance against the many pitfalls of the fiat Ponzi. During the interview, Foss delves deep into some of those pitfalls that have manifested in 2023 and how much trouble they could spell for the U.S. economy going forward. According to Foss, the global banking sector, the main transfer mechanism of the fiat system, is showing severe signs of trouble. Foss uses the example of the U.S. banking sector, which is steeply overleveraged and hundreds of billions of dollars underwater due to the high interest rates environment. In addition, Foss says the U.S. banking system is facing a huge crisis that could rival the 2008-09 global financial crisis. This looming crisis is the commercial real estate crisis, which has quietly been brewing for months, according to experts. With small and medium-sized banks accounting for 80% of commercial real estate lending, if the CRE crisis hits as experts expect it would, especially while the Federal Reserve is still tightening, many more banks could become insolvent in the coming months. This will, of course, put a lot of pressure on central banks to print more money, giving inflation free rein to run high and further debasing a currency that has lost around 96% of its purchasing power in the last 100 years. We will now bring you clips from Greg Foss's interview with Wall Street Silver. But before we do, please take a little time to like and share this video and subscribe to the channel for more videos. Also, ensure you drop your comments and observations in the comment section below. It all helps with the YouTube algorithm so our videos can reach more viewers. Thanks and enjoy.
I own both, okay? But I have never been an expert in gold or silver trading, okay? I own both of them as insurance, much like I own Bitcoin as insurance on the fiat Ponzi.
Mm-hmm.
But as far as the trading and correlation trading with interest rates and Bank of Canada doesn't matter, but you know, Fed rate policy and
Right.
Inflation expectations, I'm no expert. All I know is they are both hard assets that are better than fiat money. So let's be clear. First of all, banks are ubiquitous. The business model for banking is the same everywhere. And essentially what it is huge leverage applied to an equity capital base of approximately, well, I won't say approximately, over 25 times, and in some cases as high as 40 times leverage to the equity capital base. Now,
Wow.
Your equity capital base is your risk-absorbing capital to protect against loan losses, to protect against trading losses, to protect against mark-to-market losses on something like a U.S. Treasury bond holding. So of the banks that failed, they did not have any different type of business model than the big money center banks.
Right.
Bank of America, Royal Bank of Canada, they all have the same business model, which leverages their equity capital base over 20 times. And in the case of European banks, sometimes many times higher than that. But what that means, Ivan, just to make it as simple as possible for your listeners, For every $100 loan that a bank makes, or an investment in a US Treasury bond, which is an asset like a loan,
Right.
they only hold $4 of
No
equity
way.
capital. Oh yeah, that's the leverage in the banking system. They only hold $4. The other $96 is depositors' money and subordinate debt. So if the price of that loan falls by more than 4%, 4 cents on the dollar, or $4 on a $100 loan,
Right.
your equity capital base is vaporized. You're starting to chew into depositors' money.
Wow.
And I have traded credit for my entire life. I will promise you that bonds and loans and structured debt frequently trade in price increments or move in prices far more than $4 or 4% of parity.
Wow.
Which is to say, commercial banking is frequently insolvent. And I'm not sure if I mentioned this on your past podcast about when I started working for. Okay, so that's the key. It always happens. Bonds and debt instruments always fall by more than the equity capital base on a mark-to-market basis. The key is, for a bank, we don't have to market to market. We're special. And over time, all these things will skate themselves onside. Baloney. Okay. 100% bull crap. But the fiat banking Ponzi, or the fiat Ponzi, the transfer mechanism in the fiat Ponzi is commercial banks. So what are some of the problems that I see in commercial banks? First of all, Bank of America itself is sitting on over $100 billion of US Treasury losses on a mark-to-market basis. Okay. Yes. 100 billion.
Jeez.
But the big boogeyman under the bed is commercial real estate.
Over the past few months, there have been lots of instances of office landlords defaulting on their mortgage payments and simply walking away from the deal due to the high interest rate environment and increasing occupancy issues as a result of the world's newly adopted work-from-home policy. According to Morgan Stanley analysts, this could become the status quo, especially in the next couple of years when more than half of the $2.9 trillion in commercial mortgages will be up for refinancing. In a recent report, Morgan Stanley Chief Investment Officer Lisa Chalette said, even if current rates stay where they are, new lending rates are likely to be 3.5 to 4.5 percentage points higher than they are for many of CRE's existing mortgages. Commercial property prices could fall as much as 40%, rivaling the decline during the 2008 financial crisis. Chalette added, here is Foss's analysis of the impending crisis.
In the USA, non-recourse lending in real estate is much more commonplace than in Canada. In Canada, as you know, you take out a mortgage on your home, you secure it with the value of your home, but you also secure it with a personal guarantee.
Right.
In the United States, a mortgage is non-recourse. When the house prices go offside, they just give the keys back to the bank. They said, "Oh, thank you, Mr. Bank." So all of this is different risks that are built up in the system. Commercial real estate is absolutely a dog's breakfast in the United States right now. So many Class A buildings are not marked at their right price, and the trading prices of the buildings are frequently far below the debt outstanding. Even Brookfield Property Management, one of Canada's biggest real estate investors, has defaulted on 2 office buildings in the Los Angeles area, right?
Jeez.
So, commercial real estate is the boogeyman. But the real problem with commercial banking is the fact that it's so highly levered. And most people are like, well, don't worry. Those banks are too big to fail.
Oh, yeah.
They are too big to fail, Ivan. How do they rescue those banks? Print more money.
Yeah.
Quantitative easing infinity. That's why we own gold and silver. You get it. You get hard assets. And so I'm happy, but too many people don't. They don't understand the necessity of holding your value in a hard asset. Because in Canada, everyone likes to say, I've made so much money on my house. No, sir, you have not.
It's imaginary.
It's just that the value of your house has stayed the same, but the purchasing unit of account, the fiat dollar, has declined so much that it takes more of those same dollars to buy the same value. I mentioned I got my start in the 1980s, Latin American debt at the Royal Bank of Canada, insolvent. Royal Bank of Canada, Canada's largest bank, was insolvent.
Wow.
But that repeated itself with long-term capital management 10 years later. Then it repeated itself with the great financial crisis in 2008, 2009. And then it repeated itself in the COVID crisis. Like, it's something that people should be surprised about. It is just the fact that the asset values on the bank's books, which are loans and debt, U.S. Treasury debt or Canadian Treasury bonds,
Right.
they fall in value by more than 4% frequently. And when that happens, the banks, on a mark-to-market basis, needs to be very clear, would be insolvent. Now, because banks don't have to mark their books to market, imagine being a trader, Ivan, and you don't have to mark your book to market. Oh, no, boss. Everything's fine.
Nothing
I
to
promise
see.
this is going to skate itself back on side. Don't mark me to market and pay me my bonus that I expect. Okay, that's banking. It's absolutely nuts, but that's why we always get into the problems we get into. I turned 60 in a couple of months, less than 2 months, and I've been doing this a long time. And I'm actually very scared for the world because of the number of people that don't understand the fiat Ponzi and everything that's happening in the fiat Ponzi. And you need to protect yourself. You need to protect yourself with hard assets. We've talked about the hard assets. I believe everybody needs to own some Bitcoin. And my job, as we're going to become more friendly offline, Ivan, is to convince you of the benefits of Bitcoin. Not because I want you to sell silver to buy Bitcoin. No, I do not want you to sell silver to buy Bitcoin. But I do want you to sell stock in soft companies.
Right.
Or more importantly, I want you to sell bonds. If you own any bonds, and I don't anticipate
get rid of them.
But anybody who does, get rid of your bonds, or at least sell some of your bonds and transfer it to the hard money side of the spectrum.
Agreed.
And that includes Bitcoin. So I'm a hard money advocate. I'm a sound money advocate. Not for me. I'm 60. I'm going to be just fine. It's for my kids and for my kids' kids.
It is a banking crisis and commercial real estate crisis in 2023. In 2020, it was a pandemic and a global financial crisis in 2008. But the bottom line is central banks will always find a reason to further debase the currency by printing more money. In fact, as long as interest rates stay so high, significantly increasing the interest expenses on the nation's colossal debt, the Fed will have no choice but to print as much as possible to avoid failing in its obligations. This, of course, will only be a temporary fix, and the more we print, the higher the debt expenses go and so on. It's a vicious cycle, and only hard assets like gold and silver will help you protect the value of your investments. What are your thoughts on Foss's interview? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos on gold, silver, and copper. Thanks for watching.